Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor. But this video is not financial advice. In this video, of course, we're going to talk the stock. We're going to hang out. We're going to take questions. We're going to say thanks to you guys for the views, the participation, the engagement, all of the above, of course. Supers, whatever, join, member, all this stuff. Okay, thank you. But we're also going to break down Ryan Cohen's bombshell post on X declaring war on Wall Street and what could the implications be, right? If we're reading between the lines, is there anything there as it relates to GameStop and Cohen's intentions? We're excited to go through it. Coffee House, great to see you. Glad you're here. And thank you guys for jumping in. Red King, what's up? What's up? Great to see you, man. Well, I guess I didn't see you, but thanks for the comment and glad you're here. So yeah, let me know, things going on, questions you want me to take. I'll be here for a little bit today and we can watch the stock a little bit together. I don't want to get into the post too quickly. So if you're watching this after the fact, when it's posted on YouTube, maybe cut forward a few minutes and we can go through the hollow men together. Because this is honestly, this is the most thorough statement Ryan Cohen has made in his entire career. Even when he was at Chewy, he rarely did interviews. And if he did, they were leading up to him selling Chewy and they were brief, right? These are fighting words and thoroughly presented in a way that makes you think this guy is not playing games, right? It's him versus the world, right? Hence the pirate flag, right? And what's he fixing to do about it, right? Super exciting. He has used his words consistently for years to talk about his frustrations with the Wall Street status quo, but he has not gotten this deep. And it seems like, and I would say like his other statements have all been in shareholder meetings. This is a post. He has made posts on X. He has talked about some Wall Street stuff on X, but not anything like his more thorough statements have been in shareholder meetings. This post is it's fighting words and it's almost like rallying support, right? It's almost gaining it like what do you need support to rally for, right? What are you doing, right? It's not just a let me inform my shareholders. It's not just let me make a post that is charged in nature during election season, right? This is a unique level of war that he's declaring, in my opinion. What's up, Mr. Etna? Mr. E.T. Navy? What's up, J Card? J Card saying Ryan Cohen sure likes to talk a lot ever since his pay package proposal. Totally. I think he's definitely interested in getting that pay package secured. It doesn't really matter because he doesn't get paid unless he delivers. So you say like pump my bags. Like he's not going to get paid if you're still holding bags. So agreed that he is being certainly much more vocal. Like he spent 5 years talking about no false promise, no big talk. We're just here to work. And now he's talking a big talk all of a sudden. Right? Super interesting. And I think the pay package is probably a part of that. I think he wants to gain a little bit more retail support. But as far as the LOL pump my bags, like Ryan Cohen, he's horrible. Like literally the first tranche of his pay package is not until well over the conversion price for all the convertible bonds, well over the conversion price for the warrants. So and that's only 10% of his compensation. You know what I mean? So I don't know why anyone if genuinely you're like upset as if there's some like secret ulterior motive that Ryan Cohen's screwing everyone, like he doesn't get paid unless he executes. You know what I mean? So that said, if from a legacy perspective, you feel like frustrated at Cohen for choosing the long shareholder value approach instead of legging into the squeeze potential, I understand that sentiment. Most GME investors got in for the squeeze potential, not for the 5-year plus fundamental turnaround. And Cohen chose, it doesn't mean it can't squeeze, but he has not optimized for creating squeeze conditions. He has optimized for long-term fundamental value. So if you have frustration on that, totally agree. And I do feel like Cohen / the team baited people into squeeze type. I feel like he did like they posted stuff that made it seem like something was imminent. Were they interested in creating some long-term bag holders, some long-term investors who would not have otherwise been investors if they knew how long it was going to take? I think so. So like, if you have some frustration with, man, I feel like I've been misled by this leadership team, duped into holding for a long-term play when all I wanted was a squeeze, and they made it seem like there was going to be a squeeze, and then all they did was nothing to help the squeeze and a lot to help the long term. And they weren't really clear about those intentions from the beginning because they weren't clear about anything in the beginning. Cohen didn't even say a single thing post shareholder meeting in 2021. He didn't say anything for 2 years, not anything, but he would still post a meme every now and then, right? That makes you kind of think like, oh man, he's cooking. Turns out he was, but not in an exciting way, not in an imminent way, in a this is going to be a long road type of way. So anyways, I do want to actually give some airtime to those grievances because sometimes those grievances can be perceived as just negative Nancy's or shills in the comments, but I think there are some GameStop bulls that are genuinely pretty like frustrated with a little bit of a bait and switch from the early days of GameStop's leadership. And I resonate with that. From the present day forward looking, I don't think it's anything to worry about because 5 years later, the fundamental value has finally caught up. So, and Cohen's pay package and the warrants and the S&P on the other side, like the acquisition stuff, if he doesn't acquire something, like what's the point in pumping up how you're going to acquire something? You know what I mean? Like he's setting his own clocks. He started the clock with the warrants. They didn't have to do that. He started the clock with this comp plan. He started the clock with the interviews that he gave to Wall Street Journal and CNBC, right? He is the one that is turning on the clock and letting it tick down to an imminent fundamental repricing. And that is exciting. It's very different from he's posting a meme. No one knows what it means. The company's fundamentals are horrible, but maybe through this meme, people will stay around, right? It's very different from back then. If you're frustrated about back then, I respect it. But also, welcome to a new day. Welcome to a new day in GameStop. Year to date, not too bad. Not too bad. Not that anyone's super excited about $23.46 a share, but again, the clock has been started, and the latest that it's going to tick is October, but probably we're going to get news before then, probably at least by the shareholder meeting in June, but probably we're going to get news before then because of all this big game through the interviews he gave. It's like every clock that he has started has been a shorter time horizon than the one before. You know what I mean? So anyways, it is exciting times. Easy Riders, I'm glad you're here on the live stream as well. Clark Kent channel member. Time to change these capital markets, right? I did think about that statement about never before seen in capital markets as it relates to this post that he made on X the other day. Like, to me, I think he's being so clear on what would the change be that Cohen wants to see. So as it relates to acquisition targets, a lot of people have read into, never before done on capital markets, transformational for capital markets. And they're thinking like, oh, he wants to buy a bank, or he wants to buy PayPal, or he wants to buy some type of crypto or Web3 coin. Or I'm like, I don't know if that's the change Cohen cares the most about. I think he's been super consistent for years. Like, the change that he wants to see is related to the structural conflicts of interest between company leadership and shareholders. And I think structurally those conflicts have always existed. And he's interested in creating a company that's never been done before, in terms of how far is he going to go to eliminate those conflicts of interest and to align company leadership with shareholders. And that's going to become the future that investors care more and more and more about. Not just what are your numbers, do they look good, are you growing, but how do I know that your interests are aligned with me? Not so that you can trust me, right? Like, even yesterday on my channel, I posted this this video, the Hollow Men of YouTube. And thanks, by the way, for those that join the channel as fans and friends. Thanks, by the way, for the subs. Like, some people, I can't find all the comments now, but like, where is it? Oh, I'm a bro. I'm like you. Trust me. Like, a lot of people interpret my communication as like, just trust me, right? A lot of people interpret Cohen's communication as trust me. The point of aligned interest is not, oh, trust me, I'm just like you. The point of aligned interests is, I don't trust you. I've never met you. Ryan Cohen, you're a billionaire. You're, to me, like Jeremy, you're Budget for Life. You're some guy on the internet. I don't trust you. And therefore, how can you create a system of value exchange that mitigates for the risk that I feel related to the fact that I don't trust you, right? So with like, the aligned interests is not a trust builder, it's a risk mitigator for distrust. Anyways, very exciting to see. Jet Geek, what is up? J Card, yeah, he's just having fun and wants the share price to go up. I do too. The upper the better for me. That's for sure. John Chess, what's up, man? Just need some sweet, steady price growth. Totally. We don't need the squeeze. It doesn't need to be 1,000 a share. Of course, that would be exciting. But man, if we can keep ticking up month over month, or quarter over quarter, year over year, and I think fundamentally we're finally in position to do that. So super exciting. Easy Rider says, out of interest, when they came out saying that acquisition is in sight, the stock price went up. Surely they will pay a fair multiple on the company they buy. And so I find it difficult to understand why the market is putting a premium on their cash now that an acquisition is in sight. Jet Geek, thank you for the super. Thank you. Add to the Jimmy stash, bro. Hey, I appreciate it. The Jimmy stash. He's not talking about Jeremy's mustache, okay? He's talking about the GME stash of shares, the 85 bears, 85 shares. It's about to go up, okay? Every dollar goes to DRS Book GME shares. Appreciate it, Jet Geek. To answer your question, Easy Riders, I talked about, man, where's that conversation about? Actually, I don't even know if I made a little blob about it, about cash and different ways to value cash. I don't think I even typed it out. But the gist is, I didn't. There's a difference between excess cash and opportunistic cash. GameStop, they have said in their 10Qs for several quarters now that this cash they have, sorry, let me blow this up a little bit for you guys. This cash that they have, they're trying to buy stuff, right? They're on the hunt, they're on the prowl. But they hadn't said when. And Cohen had said publicly, like, never know. We're not incentivized to deploy cash, right? Bearish on the market, right? So it's hard to value. It's not hard for a patient investor, but someone that's saying, hey, they're GameStop's asset management business. How do we value it? It's hard to give it a multiple on cash, like a 2x or a 1.3x, 1.7x on cash. It's hard to do that if it's like, yeah, but they might keep that cash forever. You know what I mean? Like, it might be 10 years before they deploy it. Whereas the SPAC, it's like it will be deployed within the next year. So when Cohen started making statements about we're going to make an acquisition, it basically says, okay, we can now value more of this cash as opportunistic cash, M&A cash, right? Like SPAC cash, rather than just surplus cash on the balance sheet that's just valued at cash, right? Not valued at a multiple. Oh, some of this cash really is going to get deployed within the next year. And so let's start giving some premium to it. That said, the premium GameStop's getting is still, nothing. Like it's still very undervalued fundamentally, in my opinion. But you can start to see a little bit of run up, not just from a momentum perspective, but fundamentally the cash becomes more valuable when it's going to be deployed sooner, right? What's up, Andrew? Great to see you. Coffee House says GME to 10 trillion. Hey, there we go. There we go. Simple Rick says, I heard a joke. Want to hear? Never selling diamond hands and Cohen's my dad. I don't know what that means, but it's, if it's all about the delivery, if you're a joke teller, sometimes it's not the punchline. Sometimes it's just the delivery. So maybe there's a way to tell that joke that is that would garner you a few more laughs than what I was able to do for you. So the post on X, we can go through it together. I do think there are a few implications for GameStop, and I do think it's at the very least informative, interesting to know where's your CEO's mind at. And there's also some things I kind of disagree with. Like, I'm a passionate, like, altruist at heart. And the downfall of that is sometimes you become so convinced that something is right that you'll become so jaded about everything else being wrong. And I do think there's some of that here with Cohen, where he's so focused on the good, the altruistic and economic benefit, right? The mutual win-win society, shareholder, employee, company of aligning interests, that he's almost overly negative and jaded on the kind of bureaucracy of corporatism. That said, I generally align with everything Cohen shares in this. And it's part of why I'm not in corporate world. Like I've never had a corporate job. I've never even interviewed for a corporate job. I didn't even go to the job fair in college. I was like, no, thanks. I've never had a job with benefits. Like even the jobs I had before I started my own company were like pay for what you do. Even in high school, right? I worked for a warehouse and you got paid for every 20 cents or 19 cents for every book that you make. And it's like a manufacturing job, and the faster you work, the more you get paid. You can leave whenever you want to leave. Like I've always been in the owner operator mindset, not on the, hey, if I learn the right social things, then I can get ahead. Even in college, right? You see the difference. Like owner operator mindset as a college student is, I'm going to learn the best that I can. I'm going to take the test, do the best that I can, right? The more that I learn, the more I get from this experience. Maybe I'll make some connections, networking, etc. But like, I'm not here to just like, how do I get a 4.0? The corporate bureaucrat way of being a college student is, how do I get a 4.0? Right? Let me make sure that I get invited to the right study group that has the right study materials. Oh, let me pay for this private tutor that happens to have some past tests from past semesters for this class, right? Like, what kind of deals do I need to make? What societies do I need to be in? What clubs? To make sure that I am winning the game called college student, but it's totally detached from what risks did you take? How much did you fail? Right? What did you learn? What do you wish that you would have learned? Right? Why did you take this class or that class? Right? My first 2 years in college, I didn't even know about like rate my professor stuff. And I'm like, wait a minute. This professor teaching government gives only 6% of his students A's, and this other professor gives 40% of his students A's, and it's the same class. Like, I just realized more and more that like, oh, most people are playing this game called corporate college student, and I'm like, don't even invite me to your study group. And like, it's not cute to me that one day you'll be able to like, I don't know, like have the best looking resume versus like actual experience and risk, etc. So anyways, we'll get into the post, but all I'm really trying to say is the dynamics that Cohen's talking about are so real in every sector of society. And it's not just like this super elite group that's like screwing everyone over. It's like everyone is doing this in their own way, in their own little world. Everyone, most people, okay, not literally everyone, okay, but everyone feels the draw, the temptation to remove risk, remove responsibility, remove liability, and remove independence, isolation, right? Pioneering, and say there's comfort in the masses. I would much rather just do what everyone's doing, right? I would much rather just create a social framework that is self-validating, that because I belong to this group, therefore I am successful, right? In the world of Christianity, right? This is how most churches operate. It's not really about like, are you really obeying the Bible the best? Are you reading the most? Are you, getting free from the most amount of sin? Are you sharing the most with the poor? Like Mother Teresa could walk into most churches today, if she were here, and like she wouldn't be viewed as like spiritually successful because she wouldn't fit into the social corporate bureaucratic framework of that specific nonprofit's community. It's like, no, the way that you rise the ranks is not by just doing what you think is right and pursuing your faith and becoming more enlightened and more compassionate and more mature. That's all great. But the way that you succeed is by doing what the corporate entity wants you to do, right? Like, I'm not asking you like how holy are you? I'm asking you, like, are you giving to this organization? Right? I'm not asking you, like, how many times are you sharing the good news on this. I'm saying, are you coming on our trip this summer? Right? It's so anyways, sorry for all my soapboxes. Sorry if none of that made sense. I do share the frustrations that Cohen's sharing, but I also don't know, like, is this so unique to corporate America? Is this so, like, Wall Street is so bad and everyone else would never do this? I'm like, to me, this feels more like the human condition. To be honest, it feels like I've never been in any setting where corporate bureaucracy and social validation and minimizing and avoiding isolation and risk. I've never been in a situation where that was normal. But I do think it's better if this idealistic world that Cohen's communicating. So let's get into the corporate side, Cohen's opinions, what it might mean for GameStop. I'll try to keep my eye on the comments as well. If you want to make sure I see it, leave a super, but no pressure to leave a super. I will try to get to everything. We'll update real quick. Let's see how we're doing. Max Payne, by the way, is 22 today. So you might be like, oh man, down 2% when, the S&P is up 0.4%. Like, wow, what a bummer day. Like, well, we're actually closing so far much higher above Max Payne than a week ago. Max Payne was at 23. So anyways, a close at 23.5, even though week over week is a little bit down or flat, as it relates to Max Payne, is actually pretty nice. So anyways, we'll see what happens. We'll see what happens. Very exciting stuff. How are y'all doing today, by the way? Is everyone doing good? Actually said, saw your earlier videos of GameStop acquiring Target. It's really unrealistic. It is not unrealistic. It is not. I'll talk about that in a little bit. But like, literally, just like, let me just do this. Can a company with 10 billion buy a company with a 10 billion in cash? Geez, don't do that. Don't do that. Okay, geez. Here we go again. Can a company with 10 billion in cash buy a company with a 50 billion market cap? Let's see. Yes. Literally yes. Here's all types of ways they could do it. So I don't like, some people have left some of the nastiest comments, and I'm like, literally, just spend 30 seconds and you can learn about this, anyways. Actually saying, I'm not saying they can't, but it's not good. So that's a different thing. So you said it's unrealistic. I don't think it's unrealistic at all. Now you're saying it wouldn't be good for them to. I disagree. I talked about it, and, ultimately, we're talking about GameStop providing less than 4% of the revenue, less than 7% of the income, but on an equity percentage being given 18% of the new firm. That's if they don't have to necessarily spend any of the cash or raise any new debt. They might actually be able to get a higher percentage than this through using some of their cash and raising some new debt as it relates to the purchase. But regardless, you end up with a higher percentage of the company relative to your own revenue and your own income. So I think it is good, but it's okay if you don't think so. Is that true? Mr. Beakers is accusing you, Exceed, of being a Morant's burner account. Is that a joke, Beakers, or is there actually, like, do people know that about this account? That'd be so funny. Chris, I don't do a lot of TA. I mean, I don't do like TA. I make it clear that I'm here for charts that are very aesthetically pleasing. Every now and then I'll look at more general resistance and supports, price trends, but in terms of like high level TA, I'm not drawing lines in my free time. I'm staring at this spreadsheet and playing with it in my free time. By the way, I did a lot of work on this portfolio spreadsheet. I think you guys will like it, but I'll save that for a future video. But a little sneak peek, some fun stuff coming. Oh, Mr. Beaker says it's a joke. Okay. So you're no longer burner account. You've been relieved from the accusation. Osmoside says, hey, Jeremy, doing good. I have nothing of value to add other than I enjoy your content. Please keep it coming. Thanks. Thank you. And Chris says, you do good fundamentals anyway. Respect. Thanks, man. I appreciate it, guys. I appreciate it. I'm doing my best. The Hollow Men. American capitalism is rotting from the head down. We have replaced the owner-operator with the risk-taker. Sorry. We have replaced the owner-operator, the risk-taker, with the new parasitic class of corporate bureaucrat, the risk-free insider. So, okay, put on you're in English class as a middle schooler. Risk-free insider. That's the topic sentence. Like, this is the primary thesis that Cohen is talking about. Just so you know. So filter what you're saying into like this conversation. Right? By insider, I'm not referring to a specific title. I'm referring to the entire administrative state that has captured the modern corporation. This includes the directors who exist solely to collect fees, the executives who exist solely to collect bonuses, and the managers who exist solely to hire consultants. So insider is an administrative state with people who deflect responsibility. Basically, risk-free is kind of like deflecting responsibility. These are the hollow men of the boardroom. They are masters of PowerPoint. They wear the right suits. They say the right buzzwords about governance and ESG, but they are mercenaries fighting a war with someone else's ammunition. In a functioning economy, authority is tied to liability. If you make a bad decision, you lose your own money. That fear of loss is the only thing that keeps a business honest. It forces you to cut waste, obsess over the customer, and stay late to fix what is broken. Today, we have severed that link. So I want to pause here for a second because the reality is these, like the American capitalism today is over multi-billion-dollar corporations and like multi-billion-dollar revenue corporations. So like take corporation out of it. It's like you just think about your life. If you had, as an individual, $100 million in the bank, and let's say like there's a flood in your house, and like all the, I don't know, whether it was a hurricane, whether it's all the toilets going crazy, like, are you going to stay up late and try to fix it all? Probably not. You're probably going to go to a hotel and you're going to call some companies to fix your problem for you. And there's no corporation, there's no entity. Like it's a function of the wealth that has been created in the modern day America, that there are people not particularly interested in like solving every problem themselves, much more so people interested in removing problems from their personal like deck of cards and say, how little can I do so that I can create more flexibility so then I can do whatever it is that I might want to do on that particular given day. And if it costs me some money to hire the plumbers and to hire the moving companies and to get new furniture, like, great. That's why I have all this money. What else is the money for? Right? Like it's almost like Cohen is saying in a functioning economy, there is no hyper wealth. But of course, Cohen wouldn't want to say that because he is hyper wealthy. You know what I mean? So like, I don't, anyways, there's also this whole, they say the right things, they wear the right things. Again, this is a social validation framework that I agree fails to add value. Like the way that we judge talent, the way that we judge leadership, the way that we judge a company, an employee, often we are looking at the wrong signs. We're just thinking about, do we like them? Like even you, and this isn't, what I'm trying to say is this isn't so corporate as if it's only corporate, as if only billionaires do this. Like for you, when you're thinking about what restaurant do you want to eat at, like, yeah, there's some truthers out there. There's like, I would never eat at a chain restaurant, right? But even then, a lot of times you're going to the local chain restaurant, right? You're going to the local restaurant with multiple locations that's done some work to optimize their menu, whether it's from a language, branding, to clean the bathrooms, to get the right feelings, right? You're not just looking at like what's the best food for the lowest price, and I don't care about the environment. I don't care about how ownership makes me feel. I'm just looking for food. If you were looking for food, you would just go to a grocery store, right? Like when you think about who you want to work with, who you want to hire one day, who you want to hire you one day, who do you want to cut your yard one day? Like what dentist do you go to? Like people are like, well, how long have you been a dentist? It's like, okay, fundamentally, that doesn't have anything to do with his actual practice, right? Where are you located? It's like, okay, I mean, convenience, that's fine, I guess, but like what you should fundamentally look at is like, let me assess the quality of your work on my teeth for the exchange of value, the cost. But most people don't do that. Most people are just looking at what makes me feel the best, right? Like, anyways. Some guy says, bro's calling out the privatized gains and socialized losses by the perverse incentive structure, which I agree. I think all this is perverse. I just think like we're all creating suboptimal outcomes when we prioritize the socioeconomic feelings rather than fundamentally, what's your performance? Have you actually helped the company, right? Is your leadership track record obviously better than if we went with an alternative? We're not doing that. We're just promoting whatever looks like on the surface this makes the most sense to promote. And what I'm saying is, so anyways, the other thing I want to say is the mercenaries fighting a war with someone else's ammunition. So let's go back to if you have $100 million, okay. What's up, Grady? First time I'm catching a live stream. Thanks, man. He says, love your channel. Keep it up. So let's say I've got $100 million My house floods. Let's say instead of calling the plumber myself and calling the moving company myself, buying the furniture myself, let's say I have a personal assistant that I pay to do all that stuff for me. What's up, Benji? Glad you're here. Like, they're mercenaries. They're fighting a war with my ammunition. But guess what? I hired them. And why would I hire them? If I can afford them. Right? I think where the implications of what Cohen's saying gets very interesting is when the companies are failing. And we'll get there. But when the company has a ton of profit, it's like, look, if they want to pay their board members, like, they can, like, literally they can. And it doesn't mean necessarily that everyone is like a corrupt vulture, like, it's like, literally, if I want to hire an assistant for $50K a year and I'm worth $100 million, like it's not a huge deal. And if they really full send it and act like a mercenary, that's literally at the extreme expense of my livelihood, then they would get fired. And that's probably part of what Cohen's talking about. We'll get to it. Is they don't get fired, right? There's no fear of loss. There's no risk for the employee. Cohen says, we have rigged the game so that heads, the insider wins, tails, the shareholder loses. If the stock goes up, the insider collects massive performance bonuses. If the stock crashes due to their own incompetence, they are fired with a golden parachute worth tens of millions. They are gambling with the house's money, and they never leave the table poorer than they have arrived. Fundamentally, this is anti-competitive. This is anti-business. It is not optimal for business. So what do we start with? Cohen says the looting starts in the boardroom. We have normalized a country club culture where directors are selected based on social profiling rather than their ability, right? Which, again, is just like how most of you make your own decisions in your own life also. Rather than looking at fundamental ability, you socially profile. It doesn't make it okay. It doesn't make it optimal. I'm just saying it's not always like so sinister. Because you're not so sinister, right? It's not that you hate hole-in-the-wall restaurants. It's just that you can't park there, right? And your kid doesn't want to go to the bathroom there because it smells weird. And the door's broken on the stall. I'm making this example up, but you get the idea. The modern board member is often a professional tourist, paid an average of $350K a year. Let's be brutally honest about what that number represents. The average director is paid nearly 5 times GDP per capita. They earn more for attending 4 quarterly lunches than the vast majority of Americans earn in 5 years of hard labor. And for what? Most of these directors are overboarded, sitting on 3 or 4 boards. So they treat their directorships as a gig economy for the elite. Fly in, rubber stamp a comp package they didn't read, and fly out. They collect checks from companies that they do not understand, do not use, and certainly do not love. So let's be brutally honest as it relates to Cohen right here. He's complaining about board members earning $350K a year, while simultaneously he is pushing to receive $35 billion. You know what I mean? Like, I like Cohen a lot. I'm glad he's leading the company. And I have no problem with him receiving that compensation if he delivers the value that's tied to the compensation. But let's be honest, Cohen doesn't care about the number. What he really despises is the risk-free, right? Cohen feels like, in his perspective, he is on pace to receive a ton of compensation, but only after having taken a ton of risk himself that amounted to a pretty decent amount of his net worth. Like, I think he has spent, I actually don't know. What has Ryan Cohen spent? What has Ryan Cohen spent on GameStop stock? Do you know this? No. Okay, there you go. Cohen, of his money, has spent $130 million on GameStop stock. That stock is now worth like over $1 billion, right? What's 42 million shares times 130 million? Man, it's 5.4 billion. No, that can't be. 9% of the company, I don't even understand. This might be wrong. But 9% of the company that's worth 10 billion. Yeah, so it's closer to 1 billion. He has spent 130 million. It's now worth 1 billion. So he's already made 900 million. And yet he's like, I want to receive compensation worth 35 billion. Not 35 billion. 3.5 billion. I'm pretty sure. Still, of his net worth, $100 million is like what? At the time, like his net worth at the time of the investment was something like 2 or 3 billion. So like, okay, he has, okay, yeah, 966 million. Thanks, hip hop. He has spent like less than 5% of his net worth on GameStop stock. So like, I get I understand the language, but really what Ryan Cohen's talking about is just a gesture, because he's spent less than 5% of his money. The risk-free insider spends 0%. Ryan Cohen, the transforming capital markets, the reckoning, right? The perfect example of aligned interests. He has spent 5%. 5% of his money, 0%, is actually not that different. And after closing a bunch of stores, like, he is on pace to receive 3.5 billion, which is what, 10 times 30? It's like 320 times the amount that he has spent. No, maybe 32 times. Let's just call it 30. He's going to receive in compensation 30 times what he has spent himself. So, like, again, is Cohen really saying like leaders of businesses shouldn't be paid? That's not really what he's saying. Is he really saying that leaders of businesses like need to be at substantial risk of loss? It's not really what he's saying. Like, again, as a percentage of his net worth, the principal that he's put in, it's 5%, maybe. Like, what's 5% of your net worth? And if you put that on the line in some type of partnership venture with a publicly traded company that then you got to run everything and pick, like, I feel like I'm being so harsh on Cohen, because when I read this the first time, I was pumped, right? Because I'm like, let's go, and I am still kind of pumped. Don't get me wrong. But like, I'm also like, okay, but let's be real, Cohen. Like, now that 100 million is worth $1 billion. So there is actually, now it's like, 15% of his net worth he could lose, which is like, that's a decent chunk of change. So I'm not trying to disrespect it. And no matter what, like that 100 million that he put in, that 5% is still more than what's normal in America. I just think he wishes people literally like worked longer hours and like spent some money on stock. Like fundamentally, I can't really see anything deeper than that about what he's talking about. If you compare it to himself, like I'm assuming he wouldn't make this whole post if he didn't think that if he thought that he was just as hollow as everyone else, I don't think he would be saying this. If he thinks he's less hollow or that he's doing something meaningfully differently, then that means that any of these accusations, whatever the correct interpretation is, would have to mean that they're not true for him also. Does that make sense? So anyways, overboarded. What happens when these boards hire executives who also have no personal capital at risk? We get the delegation economy. When a risk-free insider faces a crisis, whether bloated expenses, a broken supply chain, or a stale product, they do not roll up their sleeves. They hire a consultant. They pay a strategy firm millions of shareholder dollars to produce a 100-page slide deck telling them what they already know. This is not management. It is intellectual money laundering. They use shareholder capital to buy an insurance policy for their own careers. So they don't literally buy an insurance policy. What Cohen's saying is hiring the consultant is the insurance policy. If the plan that the consultant produced fails, they can blame the consultants. They delegate the work because they are terrified of the responsibility. They would rather preside over a slow, comfortable decline than risk a bold mistake. This, again, I think is a key, a slow, comfortable decline. That is the context of Cohen's frustration. It is not with companies like a Google, for example. All of this stuff, this hollow men, it can be more true for Google, Alphabet, the company, than for any company in the world. And yet, the company went from, in 2024, they made $350 billion in revenue. In 2025, they made $400 billion in revenue. So like, okay, a 50 billion increase. Yeah. So if you want to get paid $1 million a year as a board member, like we're chilling. You know what I mean? Like who's really upset? I think what Cohen is so upset about is when the same thing is happening in a declining business where the revenue is shrinking, the profit is shrinking. You should be trying to save the business, but you're not, right? That is what Cohen cannot stand. It's poor business leadership. It's not, he doesn't really care that much about highly compensated, effective business leadership because that's what he is or what he wants to be in the future, right? He really can't stand highly compensated, poor business leadership. He really doesn't care that much, I don't think, about how much money does someone have to pay in stock for the company they're working for. I think Cohen thinks that feeling of loss, even if it's a token, even if it's only 1%, even if it's 0.1%, right? Just put something in so that you at least lost something. The problem is if what you're putting in is still less than what you're being paid, it's still a net pay. You know, like if a company is going to pay me $1 million a year to work there and I spend $200,000 a year on the company stock, I think Cohen would say, yeah, that's exactly right. That's what I'm talking about. The problem is like, again, maybe most people would feel differently, but I would just view it like, okay, I'm getting paid $800,000 a year. You know what I mean? Like it's not really true risk unless you're talking about they're spending more on the stock than they are getting paid. But he can't be talking about that because that's not true for him. It was true, but once this compensation package is approved, it's no longer true. He's going to get paid multiple times the sum of everything that he's put in. You know what I mean? Anyways, let's finish this up. While American insiders are busy optimizing their severance packages, our global competitors are optimizing their products. They are not slowed down by bureaucracy. They're not waiting for a slide deck. They are outworking us. Again, I think Cohen just wants people to work harder. The problem is most people don't want to work hard, especially when they are wealthy. Like, I think he's just like frustrated about what happens with wealth. I think he's frustrated about late stage capitalism, you know? And I feel like Cohen's like, look, we don't have to be late stage capitalism if you just increase your goals, increase your risk appetite, increase your commitment. And most people are like, yeah, sorry, that's not what I'm going to do, you know? So anyways, I think he's kind of grieving the reality of what happens in like for most people psychologically, what happens with hyperabundance. So, you know, is he really fixing that? I don't think he's really fixing it, but he certainly feels inclined to work late, to not be slowed down by bureaucracy, right? But systematically, is there, you know, anyways, if we continue to fill our C-suites with administrators instead of operators, we will lose our edge. Basically, he's saying instead of hiring fancy executives from other firms or professional consultants to now be your executive, what Cohen's saying is you should promote from within. The people that started on the front line, that then managed a store, that then managed a few store, right? Those are the people that should be rising the ranks into executive business leadership rather than professional executives, which I agree with wholeheartedly. We will see iconic American franchises hollowed out by fees managed for the benefit of the insiders, while the true owners, the shareholders, are left holding the bag. The time for polite governance is over. If we want to save the American economy from mediocrity, we must demand a return to the owner's mentality. We need leaders who treat shareholder capital with the same reverence they treat their own savings. The era of the risk-free insider must end. Woo! Woo! Let's let that sink in. I'm gonna catch up on some comments, and I'll talk a couple more implications. What does this make me think about if I were to distill, you know, Cohen's statement into the bare bones thesis that he's presenting? Hang out with you guys a little bit. Let's see. Okay, the stock did not particularly like me reading that letter, but maybe now that I'm done reading, it'll be happier. Let's see. What else? I'm a little bit late. I got to back up. If I had to guess, I think a merger is announced. I think there's only 8 days left in February, so it's hard to say probably February. I think between now and June, you know, like if I were to like put a guess, I'd put my money on March, but I'd probably put like, I don't know, like something like 10% of my chips in June, maybe 5% of my chips in February, just because we're already on the 20th. If I go 40% in March, where does that put me? That puts me at 55%. Okay, let's do 50% in March, 25% in, okay, 40%. Yeah, it's like something like that. Something like 45 to 50 March, 25 to 30 May, and then and then June and February on the fringes. There you go. That's my weighted probability. I don't know though, but I would be really surprised if it's later than June. I would be surprised. But he's done surprising things. Let's see. Rich Moon talking about the warrants. Yeah, Cohen's done good things. Sorry if this stream sounds like I'm just kind of like bashing Cohen. Honestly, it's not my intention. I'm one of the more pro Cohen. I'm one of the more pro Cohen guys out there. We just had a baby girl. If it was a boy, we were going to name him Cohen. Okay, so that's how little beef I have with Ryan. So, just so you know, although I'm not Jewish, just so you know, also, Cohen being a Jewish name, if you didn't know that. Some Grady says Ryan seems to be describing the absolute abdication of responsibility for shareholders that is pervasive throughout corporate America. You think you probably mean the responsibility for executives, not for shareholders. Yeah, I mean, ultimately, like, I agree that the incentives are not aligned between corporate executives and shareholders. They're not perfectly aligned, but the executives make more if the corporation succeeds for a normal company. I think where it gets particularly sinister is when the company is declining, particularly when a high-level CEO or C-suite or board member is parachuted in from a fancy career or history, brought in, paid extremely handsomely, as if they are there to save the company, but they might actually, under the table, be financially more incentivized to tank the company. That to me is like incredibly concerning. Like, that's, if I were going to write up a write-up on the American economy, like, I would much rather focus on the artificial destruction of shareholder value that's intentional, whereas Cohen is kind of like, maybe for liability's sake, he doesn't want to get that sharp with it, but when the leadership of a company is actually incentivized to destroy shareholder value while simultaneously kind of lying to employees and shareholders about their intentions to string them along and to ultimately bankrupt and seller box the company, like, that is incredibly problematic, right? Much more so than, like, the CEO of JP Morgan or the CEO of Exxon or the CEO of Google, like some of these mega cap companies. That's like, look, would it be nice if they got paid less? Would it be nice if there wasn't a wealth elite class that exists mainly to protect one another? It would be nice, but I also don't think those are like, I think the the fact that wealth drives American politics is the reason why that's such a problem. But if the wealth elite wasn't able to literally run our country and buy off politicians, like, if that wasn't a thing, and we're just talking about the wealth social class and then protecting each other and running the tops of the top companies, that's discouraging, but it's not like mafia level horrifying, but like, the fact that they also do control the government is actually like pretty concerning. But I don't think that's even what Cohen's talking about here. You know what I mean? If you want to go after the wealth elite, like, I'd be getting almost more political than Cohen did in this post, talking more about the concerns on an even more macro level than, like, how does this affect shareholders? I'm like, it's not even that big a deal for shareholders. Like, shareholders of Google are fine. but it's like it's a problem for like America, like the people that aren't shareholders. The fact that companies hold all the power in America, like that's a big problem, right? The fact that healthy companies are protecting each other, I'm like, well, if the shareholders are still doing well too, then it's not necessarily a huge problem. The huge problem is when the company's sinking, and yet those social structures do not shift. Some Grady says the justification for exorbitant executive pay packages is always, but the risk, as if being an employee is a risk-free endeavor. That is a great point, Some Grady. Great point. Employees take on huge risks. And in most states, I don't actually know what the breakdown is, but like depends on the state how much risk you're taking. Obviously, some states have higher cost of living, which that's a risk, but also a lot of states have employer like employment at will or whatever, where you can be fired any day of the week without any notice, boom, done. Like it's a huge risk to work for a company. And it's also an opportunity cost risk because you could have worked for a different company and how much better would it might have gone for the other company. And if you're living paycheck to paycheck ish, or if your salary is a huge portion of your financial sustainability, then you're kind of like you're stuck, you're screwed. Like your life is embedded, webbed within this other firm. You know what I mean? Like it's crazy the risk that an employee has to take. And the frontline risk of, especially if you're a low level employee at a low level type of company, like if I'm like a clerk at a gas station and I got to work overnights, I'm like, look, I don't want to die tonight, like literally, can we please stop accepting cash here because it puts my physical life at risk to have this cash register here at 2 a.m. in the middle of nowhere, anyways. There are huge risks outside of just how much money have you spent. And most risks are substantially more highly felt the lower your net worth, AKA for the vast majority of employees. Your employees have almost probably more risk than most shareholders do. Most shareholders, it's probably less than 1% of their net worth is in shares. Obviously, for most of us in GameStop, it's a much higher percentage of your net worth in GameStop shares. So GameStop shareholders are actually pretty substantially at risk. Most companies, it's like, look, there's not one person that's so like at risk and like a real risk, other than the employees. But that's kind of what Cohen's getting at too. Like it's, if the company is slowly like declining over time, then employees are at risk. Because of the fact that they won't be able to be employed forever. It's true, Ryan Cohen's still buying. And, Richmond said the pay package is a right to buy, not just free equity. It is a right to buy, but he doesn't have to buy. He could just take the net. So I think he's going to spend his cash to buy the shares, and it's going to raise $3.5 billion for GameStop. But he doesn't have to. He could just get paid 3.4 instead of 3.5. Basically, whatever it would have cost me in cash or whatever. Oh, it is. Yeah, it's 3.5 billion in cash for up to a 35 billion pay package. Sorry, I haven't looked at this in forever. So that 3.5 billion in cash, he could just net out of the pay if he wanted to. So that pay package is not risk. It's at risk in terms of he might not be paid it. So there is the potential that if he doesn't succeed, he will work for free. And I think that would be a great change when we're talking about super high level paying jobs, like make them earn it. Even if it's not a 10x shareholder value, like let the compensation be more at risk, the compensation in terms of these are the goals that have to be hit. The problem is the only people that have done that set astronomical goals. And most companies can't hit astronomical goals. So why would, shareholders would have to approve an at-risk that is much more modest. And would you approve an at-risk compensation for a CEO if the goal is, hey, in 2 years we'll be 10% higher in stock price than we are today? Like, why would you even approve that as a shareholder, right? Does that really align with your interests? With Cohen's, it's a little bit like, well, yeah, if you're going to 10x, then, or net of the dilution, you're going to 6x, then yeah, I guess that's probably still worth it. But it's hard to say that's worth it for the average company with an average level of growth. But I do think there's something there. Bilbo says, Ryan Cohen speaking to the man in the mirror. He falls under the same people he talks about. The difference is that he genuinely cares. I tend to agree. Charlie says, those of us that have nearly 100% of our net worth on this company would really appreciate even a fraction of his return. It's true. Bilbo says, would you invest $120 million in a company and then let them decide the fate of your cash if they didn't have a large stake of their own invested in it as well? Just saying, can't be mad when he expects a large return. I think Bilbo, yeah. I think I understand your question. But again, 120 million for us is a big number. For Cohen, it's not that big of a number. It's kind of like if your net worth is 100 grand, the question is like, would you invest 2 grand in a company and let the company decide what they do with it, even if the owners of the company haven't invested large portions of their own money? I'm like, once you scale it to the average person, it's like, I mean, like probably, like, but I would rather what Cohen's presenting, I would prefer, like I said, even back when I was a college student, like I think everyone in society is better when people take personal responsibility rather than focusing on socially fitting in. And yeah, he's critical on U.S. companies, but feels like other companies in other countries are doing a better situation. It's because they're not as wealthy. It's like third generation wealth versus first generation wealth. Like third gen, usually it doesn't make it 5 generations. Like the further are removed the wealthy family from the originator of the wealth, the less and less likely that they stay wealthy. So that's what we're becoming as a country, is like we've been on the wealthy side as a country since like the roaring 20s / then the world wars put it all in at risk, but then much better off because of the wars, because they weren't fought on our soil and we produced a ton of stuff in terms of industrial revenue, and it put a lot of stay-at-home moms to work. So now our working class is growing substantially. Like since the 40s, 50s, we've been a wealthy country, and that wealth got substantially higher during the tech revolution, and now it's getting substantially higher during the AI revolution. And I'm like, I just don't know if there's a good enough soul that can like combat the reality of what happens with wealth that you haven't earned, which all of us are in, including Cohen. He's done a lot with what he's been given. Don't get me wrong. But there's a lot that's been done before we even stepped on this earth, What else? Clark Kent. Do we see Cohen bring significantly more of his wealth into this new amalgamation? And do you personally think this message was the product of success on a merger/acquisition, or a breakdown of talks, or neither? So I think that I think the compensation plan, I think he will spend his cash. I think he will spend 3.5 billion more. That will be cash in GameStop's balance sheet. But he will net more than that, obviously. I don't know if he's going to do purchases other than his comp plan at this point, to be honest. Now, what motivated this post? What is this post basically saying? Companies should succeed. They're better off succeeding if they promote from within instead of glorifying an executive class. If you're going to glorify an executive class, at least put some of their compensation conditional on company performance, and at least require them to spend some amount, even if it's just a token, right? Some amount of money on stock, if nothing else, but for the gesture. Those two things would help a glorified executive class at least be closer to aligned with shareholders. Lastly, if the company is no longer succeeding, you have to prioritize the company, not the executive class. And the executives should be the ones that are incentivized to prioritize the company rather than focusing on their own pay. When a company is declining and declining and declining, and the leadership of the company is not reflecting some level of urgency or fear of failure, we are in a severe danger of being totally lapped by companies, and even particularly other countries, who are much hungrier to create value than they are to protect their own salaries, because they don't have salaries yet, right? I mean, they do have salaries, but like, they're not happy yet with what they're making, which is why they're hungry to make more. So let's make companies where the leaders of the companies aren't happy with what they're making. Let's make companies where the leaders feel the need to create more value, or else they lose. How do you enforce that? How do you regulate that? I don't think you can, which is why I think Cohen is going after the public to say, will you, the public, begin demanding this from your leadership, from your companies, because it's important, right? So what is that message coming from? From success or failure on M&A? I think if it's a clue of either one, I would think failure. But I don't think failure is an option. Now, failure could be an option for Target being the target. It's possible that Target backed out, and now he's so mad. If Macy's or Kohl's backs out, like, he can just buy them. He can totally take over Macy's or Kohl's hostile without any approval from Macy's or Kohl's. That would be risky to do that in a lot of ways, but he could. If Target fell through, and that's really the one that he wanted, the one that got away, then, that could be a motivator for this post. But I don't think this post is coming from a place of a failed M&A because of this ending, right? The time for polite governance is over, right? The era of the risk-free insider must end. Like, is over, to me, is like definitive of success. Like, we are saying goodbye to the past and we are bringing in the new. And what is the new? It's bags. He's trying to buy bags, right? He's trying to buy the GameStop, except maybe not quite as deep of a bag as GameStop, but he's trying to buy declining companies with corrupt leadership and saying, I'm done being polite about it. If you're not going to drive shareholder value, I'm going to drive shareholder value. If you're not going to carry these bags, I'm going to carry these bags. So he sees significant financial opportunity in the mismanagement of corporate America, particularly with declining corporations. I don't know how much of these grievances that he has really apply to companies that are succeeding. I think his intuition is that they won't succeed forever, right? Like the decline's coming eventually. Who knows when, but it's coming. But I think even if there's someone that backed out of acquisition talks, there are too many attractive opportunities that he could just buy off the jump. And so I don't think this is a super big concern to see this. And I could certainly see the argument that it's actually even more indicative of success and an even more imminent acquisition announcement. Like maybe my February 5%, maybe I should make it like February 15%. Like maybe it really is that soon. Some Grady says meritocracy is difficult to implement. Good work is often invisible, whereas mistakes are obvious. Agreed. John Cheslis, let's start the polymarket bet, then we'll know when. That's funny. That's funny. Yeah, we'll see. We'll see where the smart money goes for betting on when an announcement is made. Ortex GME short interest right now is 720%. That's exciting. Oh, we're heading back up too. 720%? That's crazy. That's crazy. I guess that's is there a post right now on stock because of that? Maybe not. I don't know. Forget it. What is Selena? Oh, just kidding. Well, forget it. 720% short interest. Another one of those quote unquote glitches. Hip Hop says, do we think the files the DOJ is releasing, the alien talk, and GME are correlated? Naked shorting was mentioned in the files, but also I feel like my tinfoil hat is on too tight sometimes. I mean, it's possible. I mean, GameStop was mentioned by name, so it is kind of exciting. They're like, okay, it really was a thing, but we all know it was a thing. Like the SEC reported on it. You know, the question is just like how many bags are still, how many short bags are still being held, and when will the dam finally break, and what's going to happen to the stock when it does? You know, but to know that there's a huge problem that's way bigger than anyone could even really conceptualize, and that it hasn't really been rectified, and that the only people that win is Main Street, meaning corporate everyone, the bureaucracy of everyone, whether it's for profit, nonprofit, whether it's government sector, business sector, like everyone is incentivized to maintain their position of wealth by avoiding closing a GameStop position, right? It's just kind of crazy. It's just like for 5 years you're an idiot, and then one day we're going to be geniuses. And it's like, dang, that was a lot of gaslighting to go through and a long time to wait, but I guess that was worth it. You know what I mean? Ryan, Grady thinks Ryan is telegraphing that he's waiting for a crash to make a big move. I don't think he's going to wait longer than June. I don't. Crash or no crash. Clark says, agreed, that last line pushed my timeline up. Argent Per says 720% can't be right. They changed it to not be able to be over 100%. And Hip Hop says seeing 15 to 16% short interest on Ortex. So there you go. I mean, we all know they're hiding some amount of shorts. It's not a news flash, but still very exciting to see where we might go. I have a question since I caught up on the. So, anyways, as far as implications for GameStop on this, basically, I think one, the timeline for an acquisition is probably. I probably would wait a little bit more towards February, March than before. I don't think you get this inflammatory and this much detail without saying, hey, we are making a move soon. Number two, I think the types of companies that Cohen wants to buy are declining companies with shareholders that are bag holders, right? Poor stock performance, poor management, clear conflicts of interest, right? He is not going after sexy names. He wants to save the American economy. I mean, that's a big, bold agenda, right? Save the American economy. He's going not just for a return. He's going for a reckoning. The change that he wants to make on capital markets, in my opinion, is related to the incentive structures for the leadership of corporations. That's like what he cares about the most. And I think he's going to expose it the most through scooping up more and more of highly shorted, underperforming, artificially declining companies. And I think it's going to start happening sooner rather than later. So that's the main takeaways to me. It's very exciting the way he says this. It really feels like pirate flag season is back and we're coming for Wall Street. It's very exciting. At the same time, a lot of the things that he said, I'm like, okay, but if we're reading between the lines, you are in a unique position, Ryan Cohen, as a multi-billionaire and leader that's been in a lot of boardrooms. Like in one sense, it is kind of like him versus the world. In the other sense, like if he wanted to have a meeting with these people, the consultants, the directors, the boardroom people, the country club, you think Ryan Cohen would be invited to the country club? Or you think because of this post that he's not invited? Like, I'm pretty sure he's invited. Okay, so like I appreciate the gesture. I also feel that some of these things could easily be pointing the one finger at you and there's four back at me or whatever. Your three fingers and a thumb back at me. I also think that some of these things are not sinister in nature, but are like just human condition. They're still suboptimal, but not like intentionally manipulative all the time, but truly how most people make most of their decisions, which is an inferior way to make decisions, right? Like it's part of why it's a way that humanity could grow, right? And maybe AI will help us with that one day, or robots can tell us when we're being idiots. That said, if everyone's winning, the idiocy is masked. It's only when the companies are declining that the idiocy really becomes exposed as either idiocy or truly like malintent. Some people are trying to talk about AMC. I'm not here to talk about AMC. I did have a question, though, which I'll get to in a minute. Is it true the pirate logo on JP Morgan means merger is coming? I don't think that they would telegraph that clearly, but it is exciting. So JP Morgan, when you look up the company, the logo is the pirate symbol, pirate flag. But we know a merger is coming, right? He said it's coming. We just don't know exactly how soon. By the way, one quick update. I started working on Power Packs Q1. I went through all the way up to this post, so like yesterday. So February, first 19 days of February. And we have, check this out. Boom. Already logged $8 million worth of revenue represented by posted Power Packs pulls. And we're not even 1 month into the quarter. Look at this. That's more than all of Q3. We've done more in February in Power Packs than all of Q3. And we are on pace to crush Q4. Super exciting. Super exciting. Here's my question. So if someone comes at me with sass, sometimes I like to respond with sass, especially if they're like particularly inflammatory. Oh, look, there's me. I had a question on if a comment I made was over the line. Okay. So y'all can help me out. First of all, just general question for you guys. Hip Hop says, did you find out if Power Packs revenue is included in Q3 earnings or is it hidden as a subsidiary? I'm very straightforward that I think it's hidden as a subsidiary, but we won't know for sure until it is reported. So it's either already being reported, but all the signs point to it's not being reported. I've made several videos about it. But we'll see probably in Q1, probably in June's report, we will see materiality reach, and then or it'll still be set, or it still won't be material, but whenever it's material, then we'll see, for sure. But a lot of people like to talk about my take as if I'm way off, but I might end up being 8 months ahead of the game on that thing. So anyways, thanks, Hip Hop. So here's my first general question. If someone makes a comment that's like big, loud, angry, accusatory, very kind of mean, very kind of short-sighted, to me, one, I don't really appreciate it that much. Okay. But I feel like if that's the way that you engage, you're throwing stones, some might say, fighting with some fire. I feel like that warrants not to fight with more fire, but just kind of try to match the energy. Like if you're gonna come at someone with all caps and some vulgar language that you're kind of inviting to be kind of clapped back at. Do you guys agree? Or is that like so petty? Is that unfair? Is that too mean? I don't want to be too mean because one time in middle school, we were all doing yo mama jokes, and then it was my turn to say one, and then the guy started crying and said I was so mean. And I was like, what? I thought we were playing this game called Yo Mom. Like, you can't just start crying. I don't actually know your mom, I'm just trying to be funny. So literally ever since then, I've been like, sarcasm, I'm going to be like way over here. Like, I don't want to be the guy that takes it too far. I just think that, so anyways, I haven't really made sarcastic comments or been accusatory or aggressive. I like to be kind. I like to be respectful, whatever. That said, I think that if someone brings that energy, I feel like it's kind of fair ground to meet that energy. What do you think? Jet Geek says, the Bible says not to go down and play with fools, bro. I have read the Bible. That's not a verse verbatim. But I wonder, you talking about don't throw your pearls to the pigs? Is that the verse you're talking about? I'm not vulgar ever, just so you know. I try to be kind, even in my little bit of pushback. Some Grady says, maybe suboptimal. Don't let the internet comments affect you emotionally. Clark Kent says, I understand the sentiment, meaning the energy is fine. So let me just give you an example. So most people are super nice. There was one though that literally before I posted the comment, I was like, am I is this kind of like mean? I don't know. Oh, we're coming with a proverb. Okay, Jet Geek wants me to look up the proverb. I'm more asking culturally and socially rather than biblically. But if you want me to look at this proverb, that's fine. Proverbs 26, verse 4 and 5. Do not answer a fool according to his folly, or you yourself will be just like him. Answer a fool according to his folly, or he will be wise in his own eyes. Wait, does this next one say to do it? Or he will be... Do not answer for... All right, this is a pretty hard one. Help me out, Jet Geek. It says, do not answer a fool according to his folly. And then it says, answer a fool according to his folly. So I think you can pick whichever one you like more. Right? I don't know. Right? I mean, it's both. I don't know. Anyways, socially. So here we go. So I'm very nice. You guys know, you can read all my comments. I've never deleted a single comment I've made. Okay, so don't even like if you really like this one. Sorry, bro, but pro hours is a horrible idea. Horrible idea, man. Dumb as F. Okay, so in all caps, rejecting sales based on pro or not. So what do you guys think? I think this comment a little bit inflammatory, right? And also, it wasn't, let's just be clear, it wasn't my idea. I'm sharing the ideas that were shared in that GameStop leak post, right? Horrible idea, all caps, rejecting, horrible idea, dumb as F. That's what he tells me. And this is my reply, okay? It's not like nothing crazy. I say, have you ever heard of Costco? Right? That's not like so mean, right? But I'm just like trying to match the energy. Like, okay, like, I don't know. You know what I mean? Like, whereas normally I wouldn't make a comment that I wouldn't try to say something to make someone else feel dumb, right? So obviously none of the words that I said were like so mean. This wasn't the one that I had a hard time thinking about, should I press send or not? But it was just like a LOL. Like, you're calling me dumb as F, and literally GameStop, potentially based on this leak, is just thinking about doing what, I don't know, what one of the highest market cap retailers in the world does. Like, it's just kind of funny, you know? So I don't know, like that's totally in bounds, right? I think so. The other one though that I wanted to actually get a thought on. Hip Hip Hop says, if this is your example of your harshest clapback, I'm pretty sure you've got a seat close to Jesus up there when this is all said and done. Thank you. I hope so, man. I hope so. There was one other though this was like I felt like my harshest one yet, and I wanted to get y'all's thoughts on it if it's too harsh. Oh, okay. Here it is. Here it is. So this guy, Target has a market cap of 52 billion. Revenue is 25 billion a quarter. Jungle, are you in here? Jungle, are you here? Are you one of the 97 people that's here? Jungle 1776. Wow, what a handle. Sorry, but if you are listening to dumb S word like this, then there is no helping you. I don't know if he's talking to me or if he's talking to Tony, but either way, he's saying that my video is dumb S word, some dumb spit. So I say, spend 30 seconds researching before your slanderous comment. This would be acquired by reverse merger like is typical with a SPAC, not a cash buyout. So it's the same thing that I did earlier. I'm like, can you buy this? You know, like that's the 30 seconds that I'm referring to, right? Like rather than just coming at someone's jugular right off the jump, like why don't you just like actually try to learn if what you're saying is true or not? And then he says, unsubscribed. And then I say, uneducated. I felt like, was that a little too harsh? That's the one that I was like, I feel a little bit sassy, but if my comment saying, hey, why don't you actually learn something? And then his response is unsubscribed. I'm like, you're basically just saying you refuse to learn. I don't even know how to help you at that point, which is funny because he's saying there's no helping me, right? Or Tony. There's no helping me and Tony. You know, and I'm like, why don't you learn? And he's like, I'll show him. Unsubscribe. You know, I'm like, oh no, my identity is found in my subscriber count. How will I ever live? You know, like, so I just said uneducated, and he didn't respond. But I thought it was pretty funny, but I did want to get some public opinion. Was that a little bit too mean? Some of y'all are saying LOL. I'm obviously not like genuinely mean. You know what I mean? That's why I'm asking this, because you can go through all my videos forever ago. You're not going to find like me in the comments being like super disrespectful. Like this is like the most disrespectful comment that I've literally ever made on this YouTube channel. Not in real life. I've said more disrespectful things before, but I'm working on it. I'm working on it. Clark Kin says trophy. Okay, so I honestly, this might sound kind of silly, but I really did kind of want to run that by you guys because I feel like this channel is kind of like our channel, you know, like obviously I'm the host of Budget for Life, but I don't want to turn into a person that you guys are like, that you don't like. You know what I mean? Like, I don't want to let this change me for the worse. Hip Hop says, be meaner. Bubbles says, I think that comment is totally fine. You're always super nice. Thanks, Bubbles. Blessed Beyond Measure says, we're all working on it, brother in Christ. Okay, so that was a not necessarily a total approval, but I appreciate your work. Thanks. Yeah, driving people towards pro membership is awesome if they do that. I don't know if they will. Oh, okay. Thanks, Blessed Beyond Measure. He says, yes, it was. Your comment is okay. Okay, great. Well, thanks, guys, for that. I was honestly felt a little bit bad. I did, like, I almost pressed the thumb, and I was like, "Oh." It's like, "Ah." And then I was like, I'm just gonna press it. We'll see. Not like I'm worried like something bad's gonna happen, but I'm just trying to send the right energy out there. So if I ever clap back on a comment, like, anyways, I just want you guys to know I'm not like what I am not doing is trying to take things personally. So if you ever read a comment like, dang, sounds like you really took that personally. Probably I'm not taking it personally. Occasionally maybe something gets under my skin, but usually I'm just trying to go into the debate, like let's discuss. And it's harder for the intentions to be communicated over text compared to on a video. It's harder for the kindness to shine through sometimes. And again, if someone's being like super mean, they're name calling me, I'm not going to try to be nice. I'm not going to try to be like extra complimentary of them. Like I'm going to try to kind of like, okay, let's tussle a little bit, but I'm just tussling because I'm just hustling, not because I actually have a beef. I have no beef with any of you guys or anyone on the internet or anyone in life. Thankfully, actually, there's no beef. I've had settle some beefs that I used to have. Still some past beefs I'm maybe still getting over in terms of like, man, that still hurts my feelings, but not like as an active current beef. You know what I mean? Hip Hop says the fact that you feel any remorse or guilt at all over those comments already proves you have a good heart, which is clear from how you interact with everyone in here. Thanks, man. Okay, so maybe Burry Burner thinks that guy might have been a plant from a certain other channel, from a certain other person that likes to sometimes be inflammatory towards other people. Some Grady says, is Jer Bear name calling? Hopefully not. I did call that one person then uneducated. I stooped down to name calling in that moment. But hopefully it doesn't become normal. Burry Burner says, most people will not name you or Tony D. Okay. Well, guys, I'm excited to see where this thing closes. I'm not going to be hanging out here much longer because I have a meeting coming up in a few minutes, and I need to grab some lunch before the meeting. RZLV? What is RZLV? You want to take a look at RZLV? Resolve AI Limited. What do you do? AI-based mobile commerce. It's based in London. They don't make money yet. Worth 850 mil. High short interest. Holy smokes. This is like, how long has it been public? Okay, a year and a half. Dang, they got slammed on their IPO. Man, I'd have to really research their technology to understand how sticky it is. Because this is like totally just startup. This guy bought 500 shares? That's nothing. Why is that even listed? Let's look at your most recent 10Q. Annual filings. Okay, show me the quarterly filings. I'm trying to just give you an answer, but based on, this is, show me some financials. Risk factors. Geez. U.S. companies put the financials at the top of 10K, but it looks like UK companies still want to put them way down in M8, like with a 10K. Is this what their app looks like? Because I'm not liking this so far. Brain checkout. If this is a consumer-facing product and you named it Brain Checkout, I just, I'm not so sure. Would you want to use something called Brain Checkout? Where are we? Golly, show me the numbers. Here we go. It should be growing a ton, right? Because it's new tech. Am I still looking at how is it the most recent? No other quarterly font. Did they stop filing after this? I don't even know. Jeez, look at those expenses. Boom. Holy smokes. Their revenue. This has got to be in thousands, right? Or is this not even in thousands? They actually in revenue only made $200,000, up from 145. And their expenses went from 26 million to 138 million. I mean, 2025 better be rocking, but this website didn't even have it, and it's their website. Look, brain commerce, brain checkout, and brain power. Oh, gosh. Why are you naming something brain power? Brain power. You're not even based in California. You're based in England. Why brain power? That's exactly what I'm asking you. Why brain power? Why did you have to do that to yourself? Brain power. Look at their news on ARR projections. Yeah, hopefully there's something in the news because their financials look horrible. Resolve. Oh, geez. Okay, 350 million in 2026. So 2025, they're looking at 40 million. 26, 350 million. So that growth is pretty epic for sure. I'm going to do a Q4. I think I'm going to do a Q4 live stream. Boom, bam. I'm not going to go as deep as I did last time where I dedicated like 15 videos to the whole process and it just got super dry. And by the end of it, everyone was like, hey, can you make a video on estimates? I'm like, I just made 15 videos. And they're like, yeah, I know, but can you just make like one kind of quick one? So I think I'm going to do like a live stream kind of estimating chicken scratch, not like estimates, but just kind of getting a feel for ranges. And then I'm really excited to see what the numbers really are because that's what matters. 500 million in annual recurring revenue. Yeah, the thing is, they're not going to tell us how much they're going to spend on all that. Partnerships with Microsoft and Google. Lots of great brands. This is such a startup. You would just have to do so much due diligence, more than I can do in this video. Like this whole news thing, it's still like, it's still lacking costs. What's this one from? A 6K. Okay, here's their most recent one, I guess. Like, how much are their costs blowing up? Oh, geez. Here's some cash. liabilities. Where's the income? Okay, so they're still bleeding money. Until they can make money. Like, you got it. Surely going from a 10x means they would finally start to make money, but they just did a 6x and they're still losing 3 times as much money as they were before. So it's just too early for my appetite. Unless you know this thing like the back of your mind, like you use this thing and you're confident in its ability to capitalize on the coming revenue into profits, then you could, like, I wouldn't get this speculative unless I knew something. Like if I felt like I had an edge on the product. Right now, the time in the market, like if you're concerned on the macro, like I'm concerned on the macro, it's not really the time that you want to be investing in startups that aren't profitable yet, because those could get slam bammed. And by the way, they could still keep all their customers, right? They could get slam bammed, sent to bankruptcy court, and then scooped up for pennies on the dollar. And then freaking Google's the one that gets to make all the money, or whoever scoops it up, So they did all the work. They built the thing, got the customers, but they couldn't quite get the financials right in time before all of a sudden investors start exiting. Maybe some of the insiders start exiting. It's interesting though. Thanks for the name. But that's kind of my 2 cents on what I can see so far. He says, I think they're a great target for a buyout. That's pretty true. Like at 850 million market cap, like they are priced, if they accomplish 50 million in sales this year, then if you are a company, they only have 61 employees, like if you think you're a Google or a Microsoft or a whoever, an eBay actually just bought a company though, so I don't know if they're going to buy another one right now. If you think we can take what they've built and actually make it make money, then yeah, it's interesting buyout, but you don't know, it might go down 50% before it's bought out. Like you don't want to buy a company hoping for a golden parachute that it gets purchased. So anyways, all right. I think I'm about to head out, grab some lunch, hit up a client meeting, and maybe go get some groceries. I'll be watching the stock though, the one true stock, that is. Excited to see where we end up today. Hey, thank y'all for being here. 96 of you guys hanging out. Hopefully I was able to do some justice for Ryan Cohen's post. And I like it. Thanks for giving me the feedback on some Proverbs. Wasn't expecting to get into some Proverbs research on this call, but thanks for the tip, Mr. Jet. And yeah, we'll keep looking at companies and opportunities in some videos soon. I got a video coming soon. I mean, we'll see. Sometimes news gets in the way and it's like, man, we got to cover this thing because this is crazy. Like that post Ryan Cohen just did, like that's actually pretty big. But I'm excited to get into. I kind of finished developing at least inner stage of my model for basically GameStop portfolio, different places it fits in the portfolio, different expected returns based on if they crush it, if they do good but not great, if they do bad, if a meteor strikes all GameStop stores, right? And whether if the macro economy is great, if it's good, if it's bad, if it's worse, like what happens to the stock and what portions of the pie are your GameStop shares sitting in, helping you guys understand that and actually have that model update continually. So if you're on my spreadsheet, you could check anytime to see basically like fundamental triggers as far as what's the upside, what's the downside, and how do you understand your position better. I'm not here to make financial advice for you, but helping you, hopefully empowering you with more insight, more education to make the best decisions for yourselves. Of course, you can always reach out to me if you're ever looking for me to help you professionally, but that's not really the goal here on the channel. The goal here on the channel is to help you. You know what I mean? All right. That's all I got for y'all today. I'll see you in the next one.